Alrighty, traders. This is Blake Morrow. You are listening to the Daily Roundup. I hope you guys are doing well. I forgot that was my background. Let me see if I can change that. Oh, I'm back in Greece. That would be so awesome. Let's see here. What is that? Oh, yes. There we go. Okay. Oh, I just learned something, but hopefully you guys can see my office now. Wow, what a day. So let's talk about all these moves, because I'm trying to sell some dollars into this dollar strength. And I had some lingering dollar positions that I let go. Like I had a US dollar Norwegian krona that I've been sitting on for like hold on really quick. Sorry, guys. I just got a phone call and I had to tell the person to get lost. Never call me again. I'm just kidding. That was Steve. He was calling. Anyway, I had some like lingering US dollar Norwegian krona, just kind of sitting around. I'm like, I don't know if I really want to hold that in an NFP. So, been kind of adding and selling and doing nothing really exciting other than buying dips, selling rallies. But it's like my buy dips would be like right here, and then sell rallies would be like over here. So it's more like profitable but barely type of thing. And I had some dollar mechs that I let go way early this morning when it was up here that I just been sitting on. Nothing like super exciting. But then after the news, I'm like, okay, there's going to be some position adjustments. So I bought some euro back at 121.60. So I bought that a little too early. And then I sold some dollar Canadian a little early at the 90 level, 90 or 80 level. I'm sorry, like right here. And I'm like, oh, man, because I was long this overnight, sold it, but I don't like, I'm kind of flat based on what I had overnight and where I'm at right now. But I think we're going to be just range bound, really. And then I picked up some Aussie, which I'm surprised actually we went as low as we have. My stops are like literally within a couple of pips of where we went. So basically my stops are below the lows, which I wouldn't be surprised if I get stopped out here. I just wouldn't be, because you guys know I'm even though I'm long some Aussie dollars here, it's more for, ahead of the non-farm payroll. I'm more bearish Aussie, and I've been long Euro Aussie for the last couple of weeks. So this is such a small position, but it's eating into a little bit of my profits in the Euro Aussie, but that doesn't really matter. For me, I don't care if I close this out for a loss, because I'm long Euro Aussie and I'm more aggressive in that position, because frankly, I think the Euro Aussie is going to go to 160 and beyond. I think this is really just the beginning of, let's go over to the pair. Oh, there it is. Like I believe this is just the beginning of this move. And what I'm hoping happens is we actually end up getting a little bit of risk off. We press above the 200-day moving average and above this previous support. So in other words, what I'm trying to tell you is I am long Euro Aussie, and I'm actually looking for a much bigger move than just the 159 and change. I'm going to be moving out my targets as we get closer. So if we get towards the 200-day moving average, I'm going to just move all stops to break even, then start to target above like 160. This is one of those that I think will end up being, a 5-6% move over time. That's what I think, but we'll see. Now, one of the things that happened today was the Biden tax plan, or and the bottom line is he's bringing up the bottom of the taxes. He's not going to get his 28% or whatever he was looking for, but he wants to bring up the lower end to actually start paying taxes. And what I told people in the chat room, I'm like, I feel like that's going to be worse news for the market. There's a lot of companies that skirt paying taxes just in general. And if he brings up the whole bottom up to paying taxes, however he manages to do it, it's actually going to be negative for equities. I know equities spiked up on that, but I'm talking more longer term. It's going to end up being negative for equities. And I think that's going to translate well into currencies where you're going to see an underperformance of like Aussie over Euro. And I think that's how I'm going to have to continue to express my view here over time. Now, I'm still short some US dollar or some Canadian yen. And it's actually a little bit more, it's a little stronger than I had anticipated it would be. But I still think this 161% extension is going to hold. So what I think is going to happen here is, you can see, for those of you that are trading the Canadian yen with me, this is what I think is going to happen. Oops. And then hit the 161% extension, because this is, as far as I'm concerned, this is unfinished business right now, right? This is post, let me go over to the daily chart. That's COVID sell-off, COVID response, 161% extension, huge resistance all the way up here, right? So my opinion is, as long as we stay below 92, I don't mind being short. I don't. I'm not going to add yet, because I want to add below this channel support, but you guys can kind of see my approach to the market right now and what I'm looking to do. I hope that all makes sense to you. What else do I want to cover today? Mark just brought up in the chat room, Aussie New Zealand. Now, the Aussie New Zealand is coming up towards this resistance, and the 618 is going to be pretty key at the 107.27. This is the 618 retracement. That is the underside of this big broken trend line. I'm surprised the Aussie is actually performing as well as it is right now against not only the euro, but obviously against the Kiwi as well. I think this is gonna end up rolling over. I've been wanting to do this trade for like the last 2 weeks. Now that I'm in the trade and short it, my average is right now is 106.93. Where the hell is my? Hold on. 106.95 is my average. So as long as I'm, if we stay below here, I'm fine. As long as we're below the 618 retracement, I think this is just a ton of resistance that we're facing. But like I said, I'm surprised the Aussie is doing as well as it is at this moment in time. What else? Let's take a real quick look at crude, because I think this is really interesting. Where are we? Crude continues to hold the breakout point. You see this? This is a breakout point. I was watching an interview with Tom Lee from Fundstrat talking about crude, and he thinks there's a lot of upside in energy before it chokes off demand. And he's like, we've been up at $5 a gallon before. Crude oil's been at 100, so there's plenty of upside there for the market. And I was thinking to myself, yeah, I don't know if I agree with that, because today's economy is different than in 2000. That was about 2010, 2011, I guess. Let's take a look. 2008. Okay. So there was a little bit different economy. This is financial crisis. So think about that. Pre-financial crisis, and the economy was, strong, obviously, rip-roaring, and it was probably very similar to where we're at right now, right? Where there's excess capital floating around. There's a big real estate bubble. As before the real estate bubble, popped, and mortgages, and reverse mortgages went upside down, that type of thing. Prior to that, the market could sustain that type of move higher in energy. Today, we're coming off of COVID. So I'm not necessarily in the same camp that this isn't going to choke off demand and choke the economy, a move like that. It may happen, maybe some inflationary pressures, but I believe we're up in that area, where it really starts to impact disposable income, for the economy. Like I just actually gassed up our vehicle yesterday. It was $50. A couple months back, or let's just say 6-8 months ago, right here, somewhere around this area, basically it's doubled in price, or close to doubled in price, to what it costs to fill my gas tank, right? Now, that may not be a big deal to you and I, but to somebody who's living month to month, right? Or paycheck to paycheck, it is. So, and I think the economy has more of those people, especially coming off of government support, at least here in the United States, probably more so. It's gonna, these higher energy costs are really gonna create a demand issue, in my opinion. So I'm not as bullish on energy as, somebody like Tom. So what does that actually mean? Well, I think we have to watch crude up here, because I think crude at these levels is really tricky. And I think we're going to have to watch and see how we close the end of the week. And I do believe we're at a point where higher crude will start to actually impact consumer spending, which may be a drag on the overall economy. I may be wrong, but that's kind of where my head's at. Amir says Biden likes higher oil price. Maybe. Jason says, Blake, what do you think will finally crack crude oil and the Canadian currency? I don't know. Aussie New Zealand cracking, but this Canadian seems bulletproof. Yeah, it does. And you have to take a little step back and realize that this, I think the Canadian is really more of a reflection of crude, because if there's a currency that is the closest tied to crude, it would be, Canada's economy, with them, tapering already bond purchases. That's going to keep the Canadian pretty well elevated. But I think if crude reverses, that's going to have a negative impact on Canada. Plus, we have the Canadian jobs report that we got to watch tomorrow. Amir asked, did I do S&P? No, but I will do it for you. So S&P, here we go. Pro below 4180, kind of stopped everybody out, bounced back up, and now we're just consolidating. So I think that what we have to be looking at with the S&P is those highs are important. That trend line is probably going to be equally important. Okay. Amir asks, what is a butterfly and how does it work? A butterfly is a harmonic pattern. So basically, like I was drawing one here with the dollar Canadian. This would be, well, this would be a Gartley pattern, and a butterfly pattern would be if we get a breakout, a Gartley pattern would turn into a butterfly, which would extend us to probably like right here, 161% extension. So if we, and you know, if we actually broke out, so butterfly would be a Gartley pattern breakout. So Gartley is basically where we're at right now, holding the 78% retracement roughly, 127% extension close to, because it's in between. And then, like I said, a butterfly would be if we actually broke higher. We actually broke out. That's what I'd look for. I'd look for this move to transpire next. Would be like that. Okay. But you have to think about, I actually had a trader just yesterday. I did not want to delete everything. That sucks. No, I did not want to do that. All right. Shit. Okay. I'll have to redraw everything. Oh man, that sucks when you do that. Sucks. Okay. So I had a trader yesterday text me. I'm not gonna say who. We were here. And wait. Raj, lifesaver. Yay! All right, cool. Thank you. All right, that's great. Thanks, Raj. Woo! Okay. So I had a trader yesterday. This is what I wanted to do. Let's get rid of that. And let's get rid of this. So I had a trader yesterday that sent me a text and said, Blake, it looks like the dollar Canadian is going to 116. And I'm like, we'll see. Just when you can look at the dollar Canadian right now and say, Blake, it looks like the dollar Canadian is going to 122. We'll see. We'll see what happens after tomorrow. Tomorrow's going to be pretty telling. I actually believe that we're just kind of range bound still. So I wouldn't be surprised if tomorrow morning we're right here in the middle of the range. You guys know, before big jobs reports or big anything that's important, we find ourselves in the middle of the range, right? Why is tomorrow so important? Because it's really going to determine whether the Fed chairman wants to taper or not, or the Fed wants to taper or not, right? Strong jobs report. There's a highly big chance that on the 16th of this month, we start taper talk. Then the market's going to have a taper tantrum. Dollar's going to go up, stocks are going to go down. We have a weak jobs report tomorrow. That's might be actually off the table. Stocks will go to new highs and dollar will probably hit new lows. Like when I say dollar hit new lows, dollar is going to break through this support. So that's why tomorrow is super important. I think that tomorrow is a very important day for the markets. With that being said, dollar, I wouldn't be surprised if the dollar gives back some of these gains going into tomorrow, as people just say, you know what, I want to go into cash, and that's what I'm hoping for. Being, you know, in some small dollar shorts, but it's small enough anyway where it's really not going to affect me too much one way or the other. Other than that, all right, guys. I hope you guys all have a great day. And if you missed this earlier, I'm doing an interview with Mark Faber from the Doom, Gloom, and Boom Report on Tuesday. I hope you guys enjoy it. I'm actually really excited to do that interview. He's such a cool dude. He really is. Cool to hear his ideas and his thoughts, right or wrong, whether you agree with him or you don't agree. So, all right, everybody, have a great one. I will talk to you soon. Thanks, everybody, for your continued support. I appreciate each and every one of you.